So how are they structured? And how does the GP get paid? How does the LP get paid? So it would take me a little long, and I need some graphics to show you that. But in general, okay, GPs, they get sweat equity in the deal, and they get paid out of their portion of the sweat equity. They get paid out of acquisition fees and asset management fees, and they get their share of cash flow and profits at the end. And the investors, the LPs, they put up 100% of the money, and they also get their share as well. So it could be a 70-30 split or 80-20, some kind of split. That's how the split is between GPs and LPs, and that's how they both get paid. So that's on the quick. And then the professionals, they get paid typically either on the closing, or they get paid out of as an ongoing business expense, right? So for example, the closing, your closing attorney would want to get paid a retainer, and maybe that retainer is then paid at closing on the HUD one, or let's say there's a property inspection that then gets paid out of the closing at the HUD one. So those get paid at closing. All the professionals get paid at closing. You get your acquisition fee at closing as well. It's a closing cost. And then once the deal closes, you have ongoing professionals. Your property manager gets paid as a percentage of collections. It comes out of cash flow out of the business. If you have a CPA that does tax return, that's now a business expense. So that comes those are all the expenses in your P&L on the expense side. So all the professionals get paid out of the deal. And then what's left is in net operating income. And then out of that, you pay your mortgage. And then what's left is cash flow distributions. And that then goes to the GPs and the LPs.